Okay, so now let's begin. Thank you for your response. So I just want to share with you because I know that over the course of our life, there will be financial advisors or friends who sell insurance. They will always tell us to do some investment in funds. So ETFs is a basket of securities, right? And this is where I like to point out some difference between an ETF and a mutual fund. So this is ETF. You can trade it like a stock. That's why it says that you can trade intraday. That means within the day, you can trade it like a stock. And then there is this mutual fund. Mutual fund is where you just pass your money to the insurance agent, right? Or pass your money to a financial advisor. And you cannot say halfway through the day, hey, Minghan, I want to sell my this fund now. You have to wait until the end of the day. So ETF, it trades like a stock, and at the same time, you have a lower expense ratio, means you actually pay less fees, but you won't feel it. You don't really feel it. It's inbuilt into the price. And of course, it involves trading commission, which is very low. Later, I'll share with you. Our account type is very low. So what are the benefits? Is instant diversification. You can trade it like a stock. I mentioned it just now, and you can buy in small amounts, right? So for example, the STI ETF costs 380. I think now is still around there. Yeah. So in STI, how many of you can tell me what is inside the STI component? How many stocks are there inside this STI, this Straits Times Index? Anybody can tell me the answer? Wow, thank you, Peter. Excellent, wonderful. There's 30 stocks. So imagine this, if there is no ETF, you will be buying stock number one all the way to stock number 30. You will be paying commission. Let's say now my commission is very cheap. Let's say it's $1. You'll be paying 30 times $1. You end up paying $30. But with the invention of the ETF, you are now just paying a commission of one time, which is $1. So ETF actually save your cost, help you to save cost. So for those who are new to ETF, so I hope this gives you some idea on why people actually go for the ETF instead of buying individual stocks. Because you want to diversify, right? Stock A go down, stock B go up. So that's where the diversification comes in. So this is the STI ETF. So these are the stocks here. How many of you actually own the stocks in this list? Can you type out the name of the stock that you own? If you have the stocks in this list, congratulations, you are involved in the so-called blue chips in the STI component. Any one of you invested in any of these stocks? DBS, Singapore Airline. Okay, okay. So we have Singapore Airline, we have DBS, Thai Beverage, Thai Beverage, Maple Tree Industrial Trust. So now, question to you: wouldn't it be good if, let's say, you own all of this, right? You own all of this, and then what happens if Thai Beverage goes down, your DBS goes up, and it goes up so much more, right? This year, the banks really went crazy, all went up, and this allows your STI to go up in price as well. So rather than owning a Thai Beverage, which hover around 50 cents, less than 55 cents, why not go for STI? So that's a case for the STI. Is my pace okay? So far so good. Oh, thank you, SM. Good thing you never list out all 30 stocks, because if you list out all 30 stocks, then my question to you would be, why not the STI ETF? Right. So is the pace okay? If the pace is okay, can you all please let me know by typing okay? Thank you, Charlene, Tiong, and Hun Kai. Just now I mentioned about the commission, and if you are using a Philip Poems Cash Plus, the commission is actually 0.08%. And if your tier is at the highest tier, you actually pay 0.06%, no minimum comp. So imagine trading it just one time on the STI ETF. Now we jump into the main dish. That means why you're here, right? You want to learn about the turning points. So what are turning points? What are turning points? I'll talk about what are the turning points, and then I'll talk about why should we look at turning points? Why? What's the case for it? And then finally is how to use it. How many of you here are new to charting, right? Like drawing the charts. Can you type C? If you're new to charting, you type C. If you're already savvy, you're very good. Number one, I don't know why you're here. Number two, can you please type a S? Okay, so there's a number of you who is C. So let me share with you this website. I use this website for my charting, tradingview.com. It's very easy to use. It's very easy to use. Why do I say that? You just need an email. You just need your email and then you can go in already. So it's very easy to use. You just need your email and you can go in. So I already have an account, right? If you can see, this is Chua MH, that's me. I just use my email and go in, and this is how it looks like. If you are in my Telegram community, this is what I'm going to do for you at the end of today. You can apply what you learn and then you put it in the Telegram comment section, and then we can discuss whether your key levels are there for the various stocks. So this is what the chart looks like. So I talk about the STI ETF. The code, right? The ticker code is ES3. This is the ticker code ES3. And this is the chart of the STI ETF. This is the chart of the STI ETF. Right? So you go down, go up. So this is charting. This is charting. This is what I mean by charting. How many of you have your own TradingView account now after talking for a little bit about it for 30 seconds? If you have your Gmail, even better if you have two screens. Use your second screen, you can watch my presentation, use your second screen and log in to, you can do along with me later. Free version, yes. That's good enough, good enough. Good enough for today. So let me show you what are turning points. This is called turning points. Right? Turning points are made up of support and resistance. This is what they call it, turning points. Some people call it support and resistance. Why support? The price come down, touch here, go back up. Touch here, go back up. Support, support. Touch here, go back up. Support. So that's support. Why resistance? Touch here, come back down. Touch here, come back down. Touch here, come back down. And if I remember correctly, it went up a bit and then now it's down. Later we'll look at the real-time charts. Look at this. This is R, right? Resistance. At each level, the price reacts and may reverse. So this is what you're seeing now. And if it breaks the resistance, for example, this is the resistance, right? Let's call it R1. When it broke R1, sometime later, this resistance became a S. The R turned into S. At this point of time, any questions on support resistance? Any questions? So this is a turning point. Any question on turning points? If so far good, so good, can you please type G so that I know that everything is on track? Thank you, XM, Charlene, Peter, Geraldine, Tiong Ping. Now, how many of you are already playing around with your chart? If you're already playing around with your chart, uh, let me know by typing a TV trading view. That's provided if you have a second screen. If you have your handphone, you can also download the app. All right, Peter is not beginner, but I don't know why you're here. Okay, and I just want to share with you guys that for turning points, it's not one number, right? It's not one number. It is a area, area of support. For example, at this point of time, if you think it's one number, you'll be like, oh, Minghan, this doesn't work because it went down. Oh, this doesn't work because it went down. Oh, this doesn't work because it did not touch. So I just want to clarify that this is not just a level. Some people, they are comfortable. They're not comfortable with one line. They will draw a rectangle. Later, I will demonstrate to you how to draw it, and then I'll show you the different tools that you can use. Now, why should you use turning points? Why should you use turning points? This is a chart of STI ETF. Okay, chart of STI ETF from the day it was created, which is 2008. And all of us know 2008, right? Market did not go well. And this is this year, current year, right? Current year. Can somebody tell me how, if you buy and hold, how much would you have made for the past 16, 17 years? How much would you have made? Can somebody tell me how? Okay, let's talk about percentage. How many percent would you get? Let's say I put $100. How many percent will I make? This chart shows you the percentage change. So now I give you the answer, 3%. So if I have $100, I invested $100 here. Can someone tell me how much am I making here? How much do I have now? After 17 years. After 17 years, after my kid grow up, get girlfriend. How much is my $100 now? Can someone tell me the answer? $100 grow by 3%. Thank you, Peter. Yes, $103. Thank you, Charlene. How many of you think this is good? If you think this is good, can you type G? If you think there must be a better way, you type B. Exactly. So that's why I say you need to know turning points. This is why you need to know turning points. Because the past 17 years, you are only making 3% if you just buy. And if you buy at the wrong time, even worse. If you can spot the turning points, yes, ETF have dividends. If you can spot the turning points, you can buy low and sell high. You can buy lower and sell higher. You may not always get the lowest, but you can buy low and sell high. So what does this strategy help you with? This strategy helps you to supercharge your portfolio. I can be a long-term investor. I buy a bit here, 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 I buy a bit here. On average, this is my price. Today my pen not working. On average, this is my price. But if along the way, I can spot the turning points. I buy here, I sell a bit here, I buy here, I sell a bit here. Along with this long-term investing strategy, I have a short-term investing or trading strategy, I can supercharge my portfolio. Let's see how much can we supercharge it. This is the STI ETF since 2020. For the past 5 years, we just look at 2020 first. Since 2020, it has grown by 16% since 2020. If you buy and hold, provided you are very accurate, right? Provided you're very accurate. So if you buy and roll the profits, which is just buying and exiting, you can actually supercharge your portfolio, and that's about 30% over 7 trades. So over here, I've already drawn out the key levels, and you realize that if you just buy at this area, sell here, that's about 4%. Here, sell here. Some of you will say, Minghan, I missed this out. But it's okay, right? Because this is your short-term trading strategy, right? I'm quite sure you diversify, right? Some of you buy insurance, you buy endowment, so you have your long-term strategy. But this is more short-term, mid-term. Some of you may call it mid-term. So 1, 2, right over here, in, out, in, out, in, out. There are 7 times of occurrences since 2020, just on this within this rectangle. And that return, if you just buy and you roll your profits, that's about 30%. How does it sound now? Does it sound better than a 3%? How many of you think now is better? You type a B, right? You let me know. You type a B if you think that this is better. Thank you, Dinaka, XM, Gricho, Shadin. So that's the reason why you should use key levels, turning points, support resistance, whatever you call it. And now let me do you one better. Let me do you one better. How many of you have traded CFD? How many of you have heard of this product called CFD? If you have heard of it, you type CFD. If you never heard of it, just type a no, so that I know like whether you like what is our crowd today. Okay, never heard of CFD. Right, so some of you heard of CFD. Stocks, very simple. I buy, stock go up, I put $1, stock go up, $1, I make, sorry, I buy one share, let's say, apologies, let me erase this. Today the pen is a bit laggy. Okay. So I buy one share. In our example, we use ES3, right? Buy one share. ES3, which is a STI ETF, moves up by $1. I make $1. CFD offers leverage. Meaning to say, I buy one share, ES3, share CFD, they call it share CFD. I just need to outlay here, right? You put up, just now we talked about the price is $3.80. Here, you only need to put 0.38. So that's leverage. The share go up $1. You also make $1. So from a return of investment basis, I use 38 cents to make $1. Compared to I use $3.80 to make $1. Which one is better, stocks or CFD? Stocks or CFD? Which one is better in terms of cash efficiency. CFD. Thank you, Ting Chong, Charlene, Dina, Susan. Thank you for your response. Yes, you are absolutely right. So, hey, Minghan, what's the catch? There's definitely a catch, right? So there's no such thing as a free lunch other than meeting Minghan. So I'm going to share with you the costs and benefits of CFD. CFD has leverage. What it does, this is CFD. This mirror is CFD. You trade CFD, your $1 will look like $10 here. That's leverage. We talk about the pros first. One example. The owner of a share. When you buy share CFD, you're not the owner. You are just speculating on the price. You're just speculating on the price of the stock. When you buy Apple, in this case, 1,000 shares, and let's say you pay $30,000, long time ago when Apple is only $30. I wonder when was that. So you are the owner of the share. You own the share. You put up $30,000. With CFD, you are not the owner. You put up $3,000. So at this point of time, this is the CFD guy, this is the stocks guy. Any questions so far at this point of time? If the pace is okay, just type okay for me to know. So sometimes I tend to talk very fast. Thank you. So this is the stocks and the CFD person. And what's next? Let's take a look. If the stock goes up and you make $6,000, it's a 20% return on investment, $30,000, right? This is primary school math. So primary school math is actually very useful. So over here, you times 100%, it goes to 20%. So this is a 20% return on investment. This is for the stocks guy. The CFD guy, let's take a look. Remember just now I said that I put lesser cash, but I make the same amount of money if the price goes the same way. So in this case, can somebody tell me, what is the number over here for me to get 200% return on investment? What is the cash that I put up just now? Let's see. Thank you for your question, Ed. I'll touch on that. Very fast. You guys already thinking forward. So what is the number I should put here? 3,000. Exactly. 3,000. 3,000. Right, I times 100%. That's 200% ROI. Very cash efficient. Now, what's the catch? Right, what's the catch? You are actually borrowing money from the broker to do this kind of leverage. What's the catch? The first catch is commissions, definitely. Commissions, buy stocks also have commissions, but the commissions for CFD is also commission. But on top of that, what else? Overnight charge. You are using the company's money, right? Overnight charge. In a way, you're using the company's money, you're buying $30,000 worth. So there will be a interest charge on this $30,000. They don't call it interest charge, they call it finance charge. So there's an overnight charge. The rate now is about 7% per annum, which, to be honest, is not a lot, and interest rates will be coming down soon. So we can expect lower rates. So this is also the period when everyone will start flocking to CFD because of the lower cost in maximizing their cash, in working their money hard. So 7% times 30,000 is $2,100. But you need to divide this by 365 days, right? So when you trade CFD, my recommendation, please take note, is you are using it for short-term trading, like very short-term trading. You can go to days, you can go weeks, you can also go months. But how long? To me, I feel maximum 3 months. 3 months, I am already uh, paying 2,100 divided by 4, already close to $500. Already close to $500. If I am going on a $30,000 quantum, right? So you may think, oh, $500, is it a lot? So let me put things into perspective for you. 30,000, sorry. Is it a lot for this case? Our quantum, right? Our contract value is $30,000, 30K. We made 6,000, right? Our profit is 6,000. Imagine you hold for 3 months for a very long time. 3 months, you make 6,000. You pay 500, about $500 in terms of the overnight charge. Is it still reasonable? How many of you think it's reasonable? Can you type a letter R? Thank you, Ting Chong. Oh, so some of you will be looking at the $500, right? So how to reduce the $500? You just trade lesser. You just trade maybe a lower quantum. Let's say you trade $10,000. $10,000. Let's say you make $600. What is the amount that you're paying? What is the amount you're paying? You're paying 700, right? And then we talk about holding it at most 1/4. So you divide by 4. So that's about 100 over dollars. 100 plus plus. You still keep the profit of 400 plus plus. So that's why when you use CFD, my recommendation is always do it short term, manage your risk, and just now Ed talk about a margin call. For the margin call, it will happen if you don't have a stop loss. So always budget, right? Always budget. CFD, you cut when you're wrong. This is very important. If you have been trading stocks, just now I see some of your comments, you have been trading stocks. A very comfortable step for you would be moving on to CFD. But if you never trade before, that means you just buy, hold, close eyes, go and sleep. Then maybe CFD is not for you, right? So to be very honest, yeah. And last but not least, this thing, what is this? This is a corporate action. Some well-known corporate action, dividend. Because CFD, you can buy and make money on the way up, or you can sell and make money on the way down, right? So that's why you give and take. You take the dividend if you are buying as per normal. You have to give people dividend if you are shorting. So in general, this is a very simple explanation of the cost. There's a benefit and cost, right? So this is the cost of having trading CFD. Any questions so far? I hope I've answered Ed on the margin call side of things. Any questions so far? If I can continue, just let me know by typing a yes so that I will move on. Thank you. This is my team. My team is the QQ team, HQ. Some people call us the HQ dealing team because I oversee different codes. If you are new to me, if you don't have a Poems account, you haven't even heard of the 0.08% low cost cutthroat brokerage, then please scan this QR code, take a look, give us a chance, open an account and join my team. I have 10 people with me, and Philip is famous for being high touch, like in terms of client servicing. And this is my Telegram. Telegram today, at the end of today, I will share with you. I will put a post, a thank you post. You can share with me what you've learned in terms of your charting. You can even throw your analysis inside, and I'll just share with you my view. Ting Chong has a question. What is the margin? Do I have maintenance margin? That is a very good question. And with that, let me share the Poems platform with you over here. So just now we talk about stocks, we talk about CFD, we talk about the STI ETF. So you will realize that on my right hand side, right, you can see that I search for ES3. There are different asset classes. So ES3 ETF, and there is a ES3 CFD. So just now I talked about like supercharge and all with the CFD. So this is the CFD. Okay, this is very important because I don't want you to buy the wrong thing. I want you to trade the correct thing. There are times when my clients make money but end up losing money. They got the direction right, they lose money because they click on the wrong thing. This is the ETF. If you're doing stocks, you will go for the ETF. If you're doing CFD, you'll go for the CFD, the green one. Can you all see my screen? If you can see my screen, can you type P2 so that I know that, okay, you guys are following me? P2, Poems 2. Thank you, Charlene, XM Tiongpeng. And to answer Ting Chong, let me open up the CFD order ticket. This is the CFD order ticket. You'll realize that the margin requirement is 20%. So to trade STI ETF, if I want to buy $100 worth, I only need $20 to open a position. I hope that answers your question. And then you can see that there's a long and short interest rate over here. Just now I mentioned the 7%. Now it reduced to 6.75%. So this is how you go about trading. This is how you look for the STI ETF. Thank you for joining me tonight. And I always like to do this. I always ask myself, what can I give to my audience when they come and join me? As much as I want to share the content, some people say, okay, just content is enough. But I always like to outdo myself. And this is something that I like to share with you. Some of you share with me that you are new to CFD. Today, all the way until 25th December. If you open an account, or if you have an existing account but you have never traded CFD, you opt in, you have a chance to get a Microsoft CFD or TSM CFD or Palantir CFD. This is coffee on us in a way because once you opt in and you are new, you will be eligible for the Palantir CFD. Just now I mentioned Palantir was $20+ early this year, and now it's already $60. And why are we doing this? Right? A lot of people are like, there's no free lunch. Oh, okay, I got free coffee. But why are we doing this? This is to hopefully those who are new to CFD, you'll give us a chance. Try our platform. Once you get the instructions on how to collect your Palantir CFD, you will give us a chance, go into your platform, you can sell it off and just keep the price of the Palantir for yourself. So this is what I just shared, the Palantir CFD. You just need to open a CFD account if you are new. But if you already have it, then I'm sorry, I cannot give that to you. And we talk about trading, 1.5 million and 4.5 million is actually not a lot. You think about it, the Dow Jones Index is already more than 40,000, right? So there are people trading the Dow Jones Index. But this is actually more for the savvy traders. If you are new, this is what I have for you, right? My gift to you. Thank you very much for joining me tonight. Ting Chong asks, what is the maintenance margin to prevent from margin call? To prevent from margin call. Margin, you cannot prevent margin call if you don't have a stop loss. For example, I have, so what I recommend my clients is this. If I have $5,000, right, I will be risking maybe about 2,005. I keep the other 2,005 as a buffer. So in the event, if let's say I really get a margin call, then at least I have this 2,500. But please have a stop loss. Have a stop loss, and you will not be in for a margin call, right? The margin call just sounds very scary to most clients from my experience with them. Clem, Poems 2 seems to be frequently unreachable. If you are my client, then that is quite impossible. Now, back to what we're here for, how to use turning points. I need to share with you my chart, and then if you have double screen, feel free to follow along with me. How to use turning points? There are many kinds of turning points. Just now I talked about support and resistance. Now I'm going to do the charting. This is my habit, and I find that it's profitable, it's useful. It at least puts me on the safer side. But of course, there are times where I really miss the trade or had to take a loss. Yeah, but this is all part of trading. And let's take a look at the weekly time frame. So I'm going to draw the lines. And why I'm drawing this line is because there's one touch, two touch, three, four. And then it came back down and then go back up above. So I call it like a 5 or 4.5. Over here, also. If you look at maybe your peers who are doing charting, let's say you read textbook, you will realize that a lot of them like to draw at the tip of the price. But what exactly is support and resistance? I would like you to revisit this. What exactly is support and resistance? It is you and me buying and selling. It's you and me buying and selling. At the tip of the price, over here at the tip, maybe only one or two people buying only, right? That's why they executed at that price. So the key area shouldn't be at the tip. The key area should be at the place whereby they always crisscross. So that's why you see my line, I don't draw it here. I don't put it there. I put it lower where they touch. My line, I don't put it over here, like right at the top here. I put it a bit lower where I can see more touch points. Because at this point of time, there's a lot of you and me, right? Minghan and Rachel, buy, sell to each other. There's a lot of us. So this is the support and resistance on the weekly time frame. Before I move on, question to you. Which one holds a higher weightage? The weekly turning point or the daily turning point? This is a weekly chart, W. That means one candle is 1 week. One candle is 1 week. That means last week, open here, close here. In the week of 4th November, open here, close here. So now question to you. Is the key level more important on the weekly chart or more important on the daily chart? Which one holds more weightage? Yes. And why is that? And why is that? Why does weekly hold more weightage? Because during the week, there's more people buying and selling. Right? During the week, more people buying and selling. Oh, so this price point, wow, must be very important. Why this whole week, so many people buy? Whereas for a day, maybe today only like three people buy at another price point. So therefore, this is what I like to do. I like to draw on the weekly. So if you realize this is actually a, let me draw out. This is actually the resistance. And look what happened. Turn support. Is it magic? Not really. It's just market participation, a little bit of a self-fulfilling prophecy because everyone is looking at it. Everyone is thinking that way. Yeah. And now we have another level, right? So you see this week, in the week of 16th September, in the week of 23rd September, in the week of 14th October, in the week of 21st October, they are around that the same price point. I will draw that as well. And then I will zoom in now to the daily chart and you realize that this is the week that I mentioned, the week of 24th September, right? The week of 21st October. So you can see, oh, daily, okay, there's a resistance. And look what happened. There is a support. And it happened on 1st November. So this is key level. Up till now, any questions? Any questions up till now? Okay, if no questions, I will continue. And now I zoom into the daily chart. I click on the 1 year. This is the daily chart. How do you know it's a daily chart? You can see here, D, daily, D for daily. So today I'm just introducing you two different charts, two different time frame. I zoom into the daily chart. I take a look. The weekly chart is very beautiful, right? It's doing well. Over here, maybe, right? In the coming week, let's take a look. Over here, maybe, right? Maybe, just maybe, I have a small support on the daily chart. Take a look at how prices move at 3.75. Okay, this coming week, either I tell you or you tell me first. 3.75. Can you all please type it out? 3.75. Let's take a look at the STI ETF in the coming 2 weeks. Let's see what happens at that price level. Hello? Anybody home? 3.75. Okay, if you catch what I'm saying, can you please type 3.75? Yeah, so for the coming week, let's take a look because this is a key level. And the other indicator I want to share with you on how to spot the turning point is this thing called the moving average. How many of you heard of moving average? Can you please type MA? How many of you never hear before? Type letter N. Type N. N for never. Okay. Thank you. Tiong Ping, Ting Chong, Andrew, Susan, Charlene, Rachel, XM. Okay. Moving average is the average price for the past X number of days. X number of days. I am going to talk about 50 day. I look at the 50 day. Why 50 day? Because plus minus holiday, uh, 1 quarter is about 60 days, right? So plus minus, a lot of people use 50. Professionals use 50. Everybody use 50. So it becomes like a self-fulfilling prophecy at times, but I can show you how valuable it is. From the high, of the price on the 15th July, the distance is about 5%, right? You can see here, 5%. Distance from moving average is about 5%. Let's take a look at more examples. Now this is the high, right? I go down. about 6%. This is the high, right? I go down about 4 point something percent. So if you are in my Telegram, you realize that I have been saying that it doesn't seem to be lasting. It doesn't seem that this thing can last. You look, when it's 4 point something percent, it pull back a little bit. When it's like 4 point something percent again, now it's pulling back. So the distance, this is the second point of turning point. Note that down, which is the distance. If you guys are getting it, let me do a quick recap. The turning points, I have introduced you to the support resistance. I also introduced you to the moving average. To answer XM, moving average, simple moving average and exponential moving average, there's no better. Just be consistent. Don't trade with simple and then lose money and then go to exponential. Then after that, change back to and fro. You will not get consistency. Be consistent. For me, I like to use simple. Some people like to use exponential because there's more weightage to the latest days. So it's really a matter of preference. Remember, at the end of the day, it is the turning points are an area. They are an area. They're not one hard number. Okay, so far so good. If it's okay, you guys can understand. Can you type a DIST to let me know that you remember? Minghan said distance from the moving average. Can you type DIST? Thank you, Charlene, Andrew, Dongping. Last but not least, I have my proprietary indicator. I call it the Singapore heartbeat. I call it the Singapore heartbeat. Okay, Ed, I'll get back. Okay, Ed says, how many days from turning points? You don't need days. Oh, you mean the MA? MA is 50 days. Okay, MA is 50 days. I call it the SG heartbeat because this indicator tracks the 30 stocks in the STI index. Tracks the 30 stocks. So you realize, let me just give you a few examples. You realize that when all the, this is my oversold zone, right? Oversold, let's just call it OS. When it's oversold, you realize that, hey, everything sell under cannot sell already. There is a chance. There is a chance. Look, do you notice that this is actually a support area? How many of you can tell that this is actually a support area? Can you type me? How many of you notice that this blue line here is a support area? Yes, only XM can tell. Okay, Charlene, thank you. Very encouraging because I know Charlene is very new to this. This is like as if it's a crash course, right? But do feel free to reach out to me. Thank you, guys. Thank you very much. So let me continue. So you realize that at this point of time, when it's oversold, there is a bounce. Not all the time. I won't say that this is foolproof, but it is a point of consideration. Look at this. Look at this area, right? Point of consideration. Look at this. When oversold, come back to this support. This one second chance, right? This one is a second chance. Already tell you this is a strong support and then it's already oversold. And here we have some, right? The oversold. And then you realize that, oh, go up a little bit only and then come down. So it's not foolproof. But at least it tells you, is it oversold or is it overbought? If it's over here, do you dare to buy? This is the overbought zone. I won't dare to buy because it's over here. And fortunately, luckily, yes, it came down. It came down, come back here, previous support, a oversold area, go back up again. So this is how I marry these few things. Number one, support resistance. And number two, distance from the moving average. Sometimes, right? Sometimes you need to do this. Why? Because at this point of time, your distance from moving average doesn't make sense at all. And then here, my proprietary indicator, I call it the SG heartbeat. And being in our community will allow you to have access to this indicator because I will be sharing uh, whenever I see that, oh wow, it's at the low, do take a look. Yeah, do take a look. So this was the low. And then truth be told, I didn't expect this, right? I must be very honest with you. I didn't expect this because wow, the banks really push this up. The banks have a huge percentage or compose a huge percentage of the STI index. So it really pushed out. This one was I totally missed this out. Yeah. But the past few ones, at least I still managed to spot them. So this is my account opening, and my Telegram. Please join my Telegram if you want access to the proprietary indicator. How many of you have taken something back from today? This is actually a crash course on key levels. If you are my client, I would love to meet you guys up, and then we can dive deeper into all these key levels and charting and analysis. Will you all be joining my Telegram? How many of you are not in Telegram yet and you will join today? Can you please let me know by typing a TG? Joining now. Thank you very much. Thank you, Rachel. Thank you. Thank you, WL. I recognize you. You're already in my community. Thank you, Dinaka. Thank you, XM. Thank you, everybody. Any questions? I'm here to answer your questions on the charting. Feel free to ask. Feel free to ask. Usually you need to pay, right? But today is free. Feel free to ask. Any question? Okay, if no questions, I would like to bring you back to the promo again. Charmaine, can you take over the screen and show the promo slides? If you want the free Palantir share CFD, please uh, join us. Join us. Opt in for the CFD, and then you can get the free Palantir CFD. So take a look at the promotion. Yes. Hey guys, I'm so surprised that there's no questions because when I was preparing, I thought I overloaded the content. Usually, if I really meet my client to really talk about all this, I think I would take a good 2 hours. So I am going to ask. Oh, there's some Q&A. Okay, 7%, is it on 30K or 3K? Chia Yong, it is on 30K. Okay, for CFD it's on 30K. FX CFD free comps, free holding period. FX CFD, yes, there's only the swap rate. There's only the swap rate. So that's for CFD. Thank you, Desmond, for your question. Hey, thank you, everybody. That's the end of my webinar. I will be here a little bit longer to answer your questions. If not, thank you for joining me tonight. I'll see you soon. Thank you, Hunkai, Charlene. Thank you, Jennifer, Geraldine. Thank you, Wenjie. Rachel, already bonus client. Yes, so you just activate. If you are new, and reach out to your remiser, reach out to your broker, your dealer, and tell them about it so that they will keep an eye for you. Rachel is the service staff of Philip, and I'm surprised to see her here. She's very a keen learner. No need recording. Just come to my cubicle. Look for me. Thank you, Avril. Charmaine, got music or not? A bit quiet, very boring. Okay, thank you, Ed. Yes, feel free to send your questions. Trading questions, preferably, because I love trading. Thank you.